In this particular video, I'm going to be correcting common RSI mistakes which most traders use in their trading. Although, if you've been using the RSI indicator, you found out that the RSI gave a lot of fake outs. But with this I'm about to show you, this will help you to prevent those fake outs and get the true direction of the market. So basically right now I'm on the chart with the RSI indicator. So most of the people who have been using this indicator, or if you're a trader or if you have been trading for a while, you notice that the RSI do give bunch of fake outs. You know, there's a normal saying that once price is at the 70 mark in the RSI, price is already overbought, and what we are expecting in the market is is a sell in the market. So, and you know this theory of when price is at the 30 mark, price is already at the oversold. So, and when price is at the oversold, what are we expecting? We are expecting a buy in the market. I'm sure that if you've been trading for a while, you notice that most of the times these things don't actually happen the way you want it to be. So what we are going to be doing here is that we are going to transform this RSI indicator to be giving us more accurate signal than it used to be. So for an example of the fake outs that the RSI do give, I'm going to show you guys right now on the charts. Example of fake outs right now on the chart. Although looking at the RSI, price is already at the 30 mark, which actually means oversold. Once price is at the oversold, remember the theory. Once price is at the oversold, we are expecting a serious buy in the market. So I want to delete that so we have a clean chart. So, and as you could see, you could see the mark here on the RSI 30 mark. But looking at the charts, we were not seeing that impact. Instead, price was just going down, still on its downtrend. But if someone would have followed this RSI indicator, you guys will agree with me that the person has lost a good amount of money. But here I'm going to show you guys how to prevent that. And right now I'm going to show you what you can use to actually make the RSI indicator give more accurate signals than what it used to be. So if you're new here, don't forget to subscribe and turn on your notification. So what you have to do is that you have to apply the moving average twice on your chart. So we're going to be tweaking this moving average together with the RSI so that this can give us more accurate signals than usual. So if you're on your moving average, you can just go to the setting because we're about to tweak things here. So if you're in the moving average, and the custom moving average used to be 9, so what you have to do is that you have to change this to twinning. So you have to change this to twinning, then you can make the style to be red. So let's make style to be red. So you have to change the color, make the color of this particular candlestick to be red. And what you have to do is that you have to thicken this light so that you can be able to view it very well. So let's increase the view, and yeah, red. So we'll have to hit OK on that one. Then let's go to the second moving average. Let's go to the settings, and yes, let's go to the input. So in this particular one, we're going to make it to be 25. So let's go increase the number to 25. Okay, 25. Then let's go to the style. We have to change this up. So let's use the yellow for this particular moving average. Then you have to thicken this a bit. So I want to show you guys this. This is really crazy. Are you guys prepared? If you're prepared, hit the like button. So now you're seeing the moving average uploaded to my chart. You're seeing the moving average uploaded on the chart. And if you're new here, make sure you stick to the end so you can get and understand this. So I want you guys to take a look. This is a total prevention of the RSI fake outs. Get this. So let's take a look at the moving average. I want to give you guys this moving average strategy real quick, because whenever price is at below the moving average, this actually means a sell, and whenever price is above the moving average, this means there's a buy coming up in the market. So you can probably see the moving average is above price, and once the moving average is above price, that means the market is in a downtrend. So let's take a look at the RSI. Let's see how the RSI is trying to give us those fake outs. So you could see probably here where the RSI is already giving you that buy signal, that price is already at the 30 zone, which means that we should buy. But as far as price is not above this moving average, we are taking the moving average signals to be incorrect. So as far as we don't find out that price is above the moving average and the RSI is at the 30 mark, at the oversold mark, we are not going to buy. So we are going to hold our trade till we see price going above the moving average. So I want to give you guys a quick example of this. So let's go into the past. Let's go back in time to see how this works. Let's use this for an example. Yes, let's use this for an example. So you could see lately that price was having a support here, and let's take a look at our RSI indicator. So we see that the RSI have already given us the first signal that price is at the 30 mark. But at this point we're seeing that at this point I have to move up. So if you actually measure that to this one, you can see that at that point in time price is not yet above the moving average. But let's move a little further after the signal from the RSI. So we could see here that price was still saying that we are at the 30 mark, but you could see here that price was around the 30 mark, but immediately price went above the moving average. Just take a look at the RSI. You can see how the RSI went up immediately and then hitting the 70 mark. Same thing is for both the overbought and the oversold. So you could see here price is already at the overbought market, which is the 70.0 mark, and you could see that price was above the moving average. So this is not a confirmation for a sell. So when we are going to take this RSI overbought market is when price gets below the moving average. So take a look. Once price moved below the moving average and price was at the 70 mark, you can see how well the market dropped below. And I want you guys to take a look at the RSI. You can see how the RSI was seriously tanking, just seriously going down. And same thing with the chart. You can see that. So I want you guys to go apply this to your charts. I've given you guys the tools, I've given you guys the secret on how you can make the RSI, tweak the RSI to make it give you accurate signals. And yes, you don't have to use the RSI alone, you have to use the RSI with the moving average. So if you did like this video, don't forget to give it a thumbs up, and if you're new here, make sure you subscribe, turn on the notification. So with that being said, man, I'm out.